Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This past week, President Donald Trump passed 100 days in office. Now, while US presidents are always in something of a race against the clock to advance their policies, the wide-reaching and consequential actions taken during Trump's first 100 days underscore perhaps an even greater sense of urgency. Trump's re-election, the oldest president to be inaugurated, let's not forget, and only the second to be elected to a non-consecutive term, presented him with a rare second chance to deliver on a mandate that may have seemed impossibly out of reach after losing to Joe Biden in 2020. Concerns that next year's midterms could threaten the current Republican majorities in Congress may be yet another factor driving the rapid rollout of his policy agenda. So, how to make sense of the first 100 days? Well, I'm delighted to say we welcome back to the programme our friend Kurt Reiman, Head of Fixed Income Americas at UBS in New York. Hi, Kurt. Welcome back to the show. Now, we chatted in the aftermath of the tariff rollout, and I'm certainly excited, intrigued to get your take on this early milestone. Trump's made much of his economic wins so far. That's what he calls them, at least. Do you have a view on that?
I do. Yeah. I mean, this is, like you say, this is kind of early days. There's quite a long way to go. And I think the administration is taking the long game here with some of its tariff and other approaches. You remember when the president was elected, the markets were rather enthusiastic about this. They interpreted the election as being helpful around areas like deregulation and the potential for rolling out extensions of tax cuts and maybe even new tax cuts. But the interpretation of that shifted. There was no sunlight on any of those issues for a while because the tariffs just kind of sucked up most of the oxygen in the room. Tariffs have been chaotic. I mean, there's just no other way to describe them. And tariffs create uncertainty, and, businesses and consumers and investors don't like uncertainty. It's not just the magnitude of the tariffs, which themselves are enormously high. We have the highest tariff rate now in over 100 years. And we haven't had tariffs this high by presidential proclamation. It's been the result of congressional legislation. So very different avenues for coming to this high level of tariffs. But that brings us to the second point, which is when a tariff is legislated, it has more durability. When it is declared by executive action, it could be easily reversed, either by this current president or by a future president. And that just makes it hard for, one of the big issues that the president is hoping for is that with these tariffs, it results in countries investing in manufacturing and other operations within the US, which of course would give the US economy a boost. What we have now, you asked about the economy, is, at the beginning of the year, economists were looking for the U.S. economy to expand by about a little bit more, 2%, which is, not as high as recent years, but it's a win. That's a good number. Now, the risks of recession have grown. The weakness around the economy now has those estimates down closer to 1%. We have our view now, which is at 1.5%. But then on the flip side of that, inflation, which, this president also ran on a policy that inflation would come down over his term, at least in the early days here, expectations because of the tariffs, maybe also a little bit because of immigration, that's pushing inflation rates higher.
The opinion polls, Kurt, are showing negative approval ratings for Trump. Perhaps predictably, he's called it fake news. He's blamed Biden. Do you think he might react to that polling, though, Kurt? He's a Teflon politician and character, but do you think he might be reactive to that data set?
Yeah, and I think when you ask about reactive, you're wondering about the fate of these tariffs. And there seems to me anyway to be, I'm at least perceiving this idea that the tariffs are either, on at this like really high level, call it, low 20% effective tariff rate, or off, meaning back to where they were before he took office. And that's not, 2.5% is not the landing zone. So how might he respond? And I think we're already seeing this response play out. You point out, rightly so, His approval rating has suffered. The near-term economic outlook has suffered, mostly because of business uncertainty. Inflation forecasts are higher. There's been upheaval across a range of financial markets, and that is, in a way, circular. It feeds back through. And so we have seen some evidence of a Trump put, and whether it's coming from the bond market or the stock market doesn't so much matter. He is either rolling back the tariffs with great fanfare, in some cases, rolling them back quite quietly. And so where might we end, I guess, is the question. And in our view is somewhere in the, call it mid-teens effective tariff rate. So quite a bit higher than when he took office, but nowhere near where we are now. And the benefits of that are at a lower tariff rate, you raise, this is sort of ironic, but you raise more revenue because those tariffs are not at such a high level that they destroy the imports and the economic activity on which the tariffs are based. And that revenue is very important. This starts to bleed into fiscal policy. We've talked a lot about the effort to extend tax cuts. That's a costly endeavor to the tune of $4 trillion over 10 years. So it's helpful to the administration to think that they can be able to point to the revenue from tariffs. But at 25 or 22%, the revenue won't be as high. And boy, those deficits as a share of GDP, which are already high, end up higher if the US economy goes into a recession because the denominator isn't growing, it's falling, the GDP. So, I think there's a lot of reasons for this to roll back. And I think your point about the approval rating having declined quite sharply is really approaching the average of his first term. And then, of course, complicating the midterm elections and so forth. That's that's hard to ignore. As Teflon as you may be, that's a hard reality to ignore.
Could the GOP lose control of Congress? The margins are narrow as it stands, of course, but I wonder, could that cause jitters amongst Republicans more broadly? And, is control of Congress definitely at stake next year?
I think it's a perfectly reasonable question. Yes, when you have a majority government like we have now, where it's unified control of both chambers of Congress together with the White House, that typically flips 2 years in during the midterm elections. And I was contemplating a little bit why, why this sense of urgency. Presidents are always working rapidly to get their agenda across the line in their first 2 years. In a way, it's not different. But when you look at the number of executive orders that President Trump has signed at over 140 in 100 days, then you wonder about what might be part of the incentive behind that. And yeah, I think there's some argument that, he is also, he's the oldest president to be inaugurated. He is the second president to serve a non-consecutive term. So he now has a, second chance here, but not just the second chance of a non-consecutive term. He also survived an assassination attempt during the campaign. So when you add to that the risk that, as is usually the case, united government flips divided because one or both of the chambers of Congress is lost to the other party, the Democrats in this case, then you really do have a very short window. And the window's even more compressed because, you kind of have to get the bad news out of the way early so that the clouds can part and the sun can come out in enough time before, as voters are making up their mind of who they're going to vote for in these midterm elections. So that could be why these first, 100 days have been, there's been this much upheaval. And it is rather uncharacteristic to have it be, this volatile. But maybe things settle down just around this idea that if the midterms are going to go the Republicans' way, the economy needs to be in a better place, and the president's approval rating as well, because typically Congress will ride the coattails of the sitting president. And in this case, at this point, that's called into doubt.
Kurt, what about, you talk about the V word, volatility. If we have to sort of accept and expect that we continue to see elevated volatility because it's the nature of Trump's approach to politics continuing throughout the administration, what do investors do? Because obviously, I guess they need to navigate that volatility, but it is by its nature unpredictable.
Yeah.
So do you have to then think about opportunities, looking at how you can harness structural, tactical opportunities that arise as a result? How do you start to make sense to keep that medium and long-term view from an investment viewpoint?
So some of the clients that I speak to are starting to embrace precious metals in a way that they would have not considered before. People have strong views as to whether they include gold in their portfolio or not. We've been long proponents of gold. It seems each time we have to, as gold rises and it punches through our forecast, we end up having to lift our forecast. This is not about gold necessarily as a store of value. It is, from our point of view, an asset that central banks are purchasing as part of their portfolios to diversify their foreign exchange reserves. And as that plays out, it's going to lift the price of gold. We think gold is not just something that offers some upside, but also it offers some preservation of capital within the portfolio, meaning it's a volatility dampener. Another area that I'd look to is the bond market. When we went through the tariff uncertainty, which was back then rather, I guess, simple in 2018 and 2019, those were simpler times. When we think back to that episode of volatility, bond yields were not as high as they are today. So you couldn't necessarily get the kind of cushion from fixed income then that you can now, where when you look to the bond market, you're finding yields that are pretty attractive on a multi-decade window. And so look for income across a range of assets, not just coming from the bond market. I do think that higher quality bonds are a very significant part of providing a hedge or a buffer against the volatility. That could be high grade sovereigns or investment grade bonds, but also look to income that you're going to derive from the stock market, where typically the higher income producing sectors or industries within the stock market also tend to be more defensive. And then I think the last place I'd go is around this idea of geographic diversification. We came into this year with the idea that the US was maybe one of the only places in the world to invest. I think that whenever you have those kinds of assumptions, then you better check that assumption, because there are a number of great investment opportunities globally. We have long been advocating a globally diversified portfolio. This year, US stocks have had a rather rare, at least in the last 15 years, rather rare underperformance versus global equities. So, maybe reconsider the opportunity set outside of the US and think about how, at a time like this, when, say, for example, Germany and other European countries are spending more on defense and letting a little bit the strictures around deficit spending relax a bit, how that might play out in the real economy and provide some opportunities that haven't been there before. So I really would come back to some of these, what are kind of basic rules of the road for investing: geographic diversification and seeking income in the portfolio.
What about the state of the discourse, the language, whether that's kind of intra-party, stateside? I guess predictably, Trump is sort of blaming the previous incumbent. That's to be expected. Everybody does that to a degree. Are we any closer to knowing, or do you have any instinct, even just personally as an observer of these things, about where we're at in terms of the sort of business of doing politics? Because as you've mentioned, one can make a huge number of executive actions, but you need legislative moves often to cement the changes you want to see. And that often does require, if not a bipartisan approach, a slightly more expansive dialogue. Do you think there's any appetite? Are we seeing any signs that any kind of even a little hint of pragmatism might be entering the Trump camp's approach, or is that just a bit of an idle wish?
I don't think we're going to get a Senate or even broader congressional check of the president's agenda. The Senate attempted an effort here to kind of reverse, if you will, some of the tariffs in a recent vote. And the House, it's kind of dead on arrival when it hits the floor of the House. I don't see the House picking any of this up. So it's mostly symbolic at this point. Some Republicans have joined what is mostly a Democratic initiative, but they don't have the votes. And at least for now, that's the case. But I don't mean to say that like the checks and balances, one of these kind of core principles that we think is a factor behind some of the, if you will, U.S. exceptionalism thesis. But I don't think that's lost. If you're observing the U.S., maybe from outside the U.S., it's important to keep your focus on the Supreme Court and some of the lower courts, even around tariffs. If you're not following this, there's a number of lawsuits that are stacking up. There's one, a Florida business owner has a stationery company that depends on imports from China. And she, together with a conservative-backed legal group, have filed a lawsuit against the administration in the Court of International Trade, alleging damages from the tariffs on China. These are the 20% tariffs on China because of fentanyl. So I guess I'm just giving one example of many that are working their way through the courts. And I think there's some skepticism as to just, will the courts push back? I mean, after all, a number of the Supreme Court justices were nominated and approved in Trump's first term. So how could it be that the Supreme Court would push back against Trump's agenda? And I think the way we should be looking at this is, how is the Supreme Court going to interpret the Constitution? And will it see some of the actions of the president as potentially stepping outside of the lines of what the court interprets as being what Congress has stated in statute? And there's an argument here. I don't think it's an obvious argument. After all, there's no precedent of using the International Emergency Economic Powers Act to levy tariffs. So this has never been tried before. We don't know how the courts are going to move, whether they enjoin or whether they declare it to be illegal. We have to see. But just the point is that maybe we can't expect Congress to weigh in on or block some of the executive actions, but the courts are in play here. And I think it's worth watching, because when we think about the landing zone for tariffs, it's not just, will the president negotiate deals? It's also, will these tariffs be permitted? And that's something that's working its way through the courts today. And I think it's something that may not necessarily jump off the front pages of the news as you're working through it. So I thought I'd just share a little bit of that with you.
Yeah, definitely. Watch this space. Let's say we're sat here and we're talking about 200 days. Would you even hazard a guess of what the headline of our conversation might be? Or if history, even in the last 100 days, tells us anything, it's that we should not make the mistake of making predictions.
Well, let's sit down in 200 days. Why don't we do that? Let's put that on the calendar already now. And I think what they'll be talking about is extending the tax cuts. And we'll probably also be having a rich conversation again about the debt limit. So, and by the way, extending the tax cuts and the debt limit are all part of one big, beautiful bill that's working its way through Congress right now. And many of the tough choices were punted down into that 200-day zone that we're now in, that 100 to 200 days. So Congress has a lot of tough decisions to make around Medicaid and some food assistance programs, and how much those cuts will be in order to fund extension of the tax cuts and all sorts of other issues that will very much be taking the spotlight. And I do believe that there will be also some trade deals announced. Now, again, we're not going back to 2.5%. These deals also will not be binding in a court. They're sort of the international relations equivalent of a handshake, memorandums of understanding, communiques, and so forth. But that may be enough to provide, again, some maybe reduced uncertainty around the path for tariffs. So that's also something that will start to become, I think, more in the headlines than the kind of the cudgel of raising tariffs to bring countries to the table.
Kurt Reiman. And that brings us to the end of this edition of the show here on Monocle Radio. Do listen again and explore more at monocle.com or follow the show wherever you get your audio. And you can discover more and find out how UBS can help you at ubs.com. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.